Hello everyone, a warm welcome to the Smart Market Insights here on Kalkine TV. My name is Sage and today we'll be looking at whether Australia will see its first cash rate hike in more than a decade after today's RBA meeting later in the day. The Australian economy is eagerly awaiting for a momentous decision from the Reserve Bank of Australia. While the market seems divided on the decision, a rate hike will likely be introduced soon. Following the release of worrying inflation data last week, some economists have shifted their rate hike expectations forward to as early as May. Rising inflation puts pressure on the Reserve Bank to raise rates as early as possible to curb the high money supply in the economy, and the central bank often resorts to higher interest rates. This effectively makes borrowing more expensive and reduces the money supply in the economy. Reduced investment and withdrawal of money from the economy help to curb high inflation. The RBA's policy decision will be out today, this afternoon, when it will meet for its monthly monetary policy decision meeting. With households and experts waiting for today's decision, a lot depends on how the central bank proceeds with the policy. If an interest rate hike were to be announced, it would be followed by multiple hikes by the RBA, and thus borrowers are expected to see their mortgage and interest repayments shoot up in the coming months. The biggest reason forcing policymakers to push their rate hike forecast forward is March's biggest quarterly inflation rise in more than 20 years. And the data released by the Australian Bureau of Statistics showed that annual inflation jumped to 5.1% in the March quarter, while quarterly inflation rose to 2.1%. The underlying annual inflation has reached 3.7%, well above RBA's 2 to 3% target range, and this has ultimately compelled many economists to revise their forecasts of a rate hike from the previously expected increase in June. Perhaps the most critical evidence of a May rate hike is presented in the cash rate forecast revision by three of the big four banks. Australia and New Zealand Banking Group, National Australia Bank and Westpac Banking are all expecting a rate hike of 15 basis points in May. However, the Commonwealth Bank of Australia expects a hike in June. Some other market pundits have suggested that a rate hike of as big as 50 basis points could occur this year if the RBA takes an aggressive approach to hiking rates. And those on the opposite end of the spectrum believe that it would be too off-brand for the Reserve Bank to deviate from its previous stance of being patient with the rate hike. And despite three of the big four banks expecting a May hike, some forecasters believe that the RBA faces the tough task of regaining its credibility in the eyes of the public. The RBA maintained a very cautionary stance toward rate hikes for a long time, stating that rates would not rise until 2024, and this ambitious target was met with an abrupt end as surging inflation created havoc across the global economy. It soon became clear that RBA had dangerously underestimated inflationary pressures, with the central bank also admitting that. And consequently, households might have to digest the painful reality of a rate hike coming this year itself. And now the RBA has a chance to redeem itself in front of the public by holding off the rate hike decision for the next few months. And additionally, the central bank had also stated that it would wait for both the inflation and wages data before raising the rates. And taking a decision based solely on the inflation data could be contrary to the central bank's previous statement. Real-world interest rates are already rising even as the cash rate decision is awaited. And most significantly, fixed rate borrowing costs are up to unpalatable levels for most households as lesser mortgages are being taken out. Housing prices have already declined, and thus the impact on one of the most critical sectors of the Australian economy has already been achieved. The slowdown in the housing market is expected to be more pronounced once the RBA raises rates. And thank you for joining us. We'll be waiting the decision as it approaches later this afternoon. Keep watching Kalkine for more of these great market insights, and we'll be back tomorrow with the Smart Market Insights show. Till then, keep watching for live expert talks and related insights. Sage here signing off for now.